makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So let's get to the politics because it's spilling over on Wall Street. The drumbeat of pressure on Joe Biden to drop out of the presidential race is getting louder. Biden rapidly losing support of Democrats in Congress. Dozens actually demanding that he withdraw from the presidential race, though the White House denies a New York Times report that he's considering bowing out. Now let's bring in Bloomberg's Kriti Gupta. Kriti, so what do we know? And it's really all anyone's talking about.
Well, it is. And the last 24 hours have been quite hectic on both sides of the Atlantic as everyone kind of works out what to do. This all really started, Francine, with a New York Times headline that suggested he is weighing dropping out, to which the White House spokesperson Andrew Bates responded on social media platform X saying, quote, that claim is absolutely false. If the New York Times had provided us with more than 7 minutes to comment, we would have told them just that. You're also seeing reporting from other major outlets talking about the fact that they are considering what the red line is, what scenario would actually require him to drop out. CNN, for example, reporting it would be one in which the polls are plummeting, the fundraising is drying up, and the interviews are going badly. Fran, we're not there yet, but that's what's on their minds.
Kriti, even if this was something that has been dissipated from the White House, I mean, it must have an impact on funding. What are the polls saying?
Well, the polls are showing the biggest gap for in President Trump's favor in this election race. 7-8 points is where we're looking at in the latest New York Times and the latest Wall Street Journal polls as well. What's important is what comes next, though, Francine. And it's this idea that tomorrow night, U.S. time, you are going to get an interview between President Biden and George Stephanopoulos on ABC. The expectation here is that after that debate, we'll see what those polling numbers actually look like. And then the Democratic National Committee will then kind of rally the party leaders and figure out what the best course of action is. But again, it does come down to that story because already you're seeing some of the fundraising come down. You're seeing Kamala Harris rise in the polls despite her not even being on the ballot. But it's still the question. The one unifying piece in the Democratic Party is how do we prevent a Trump 2.0? And that seems to be on everyone's minds, from the president to the leaders of the party.
Kriti, thank you so much. Kriti Gupta there with the very latest on U.S. politics. Now let's bring in Anika Gupta, Wisdom Street's Director of Macroeconomic Research, and Bloomberg's MLive's Noor Al-Ali. So thank you both for joining us. Anika, so first of all, just a reminder to everyone, it's UK election, so we can't talk about the UK until the polls, of course, come out. That's at 10 p.m. tonight. But it seems that politics is really changing the kind of market behavior.
Absolutely. I mean, you know, it's coming at a time where we're seeing some of that fading AI momentum take shape in the global equity markets. And we're seeing political and geopolitical risks really dominate front and center on the equity sentiment. That's what we're really seeing in trading. And I think it's coming at a time where investors are now trying to reallocate their assets towards more defensive assets in nature. So they're trying to play the safer areas of the market, which are defensives, such as utilities, healthcare, more quality names and more safer assets, as opposed to more riskier names at this point in time.
If you look at some of the elections, so we have the French elections, and that's kind of moving around in the markets, Nora. We also have, because of the Joe Biden question mark, it seems that there's quite a lot of Wall Street changing money to and from dollar and to and from treasuries.
Yeah, absolutely, Francine, and good morning. And right now, as Anika was saying, we're now at a point where we're looking at that playbook into the run-up of the U.S. election. What does that mean for traders and their portfolios? Initially, I would say that would be dollar positive, right? If a Donald Trump presidency is actually what is the outcome of the U.S. election, that means higher yields, potentially on the promises of those tax cuts he's saying, maybe more tariffs on Chinese imports. That is dollar positive. But Francine, I'm going to point your attention towards the Federal Reserve. The U.S. election is on November 5. Can you guess when the Fed's meeting that month? Just the day after, right? So the markets are currently pricing about 70% of odds for a September cut. We are seeing some points that the data is starting to allow policymakers to think maybe cuts are starting to, happen soon. But, if that doesn't materialize into September, that puts a greater emphasis on November. And that's a lot of volatility for the currency just in the run-up to the election.
Yeah, and again, there's economic data out of the U.S. really supporting the case for the Federal Reserve to go maybe sooner than expected. But then I was in Sintra, Portugal at the ECB forum speaking to a number of policymakers, and even Austin Goolsbee was very cautious in that they don't want to mess this up. So maybe they do want to wait for just a lot more data.
I agree with that, Francine. In a way, we do hear a lot of Fed officials point in the direction of being a lot more cautious. But if you look at some of the data that has been coming in, we are seeing softer prints. And even, the minutes of the FOMC meeting is now showing a change of direction. Instead of Fed officials focusing on inflation coming down, now they're actually looking at, employment numbers in the labor market, which is rebalancing. So clearly, they are seeing a cooling in the labor market. That progress on inflation is coming through. We saw that evident from the PCE data. And I think that should give them... There's also a concern in the minutes of the meeting on lower income and middle class income strata of society that are getting penalized and affected by this higher rate environment.
But Annika, is there, again, a concern? So unemployment at the moment around 4% in the U.S. Is a concern that actually the numbers worsen, and then suddenly it escapes them?
Absolutely. We are heading in that direction. There's a very high probability now that migration numbers are going to come down, and that was also pointed in the FOMC meeting. So once we get that alleviation of migration numbers, we will automatically see unemployment start to rise. And it shouldn't be a case of being too late, which is why, we at Wisdom Tree still believe that a 25 basis point rate cut is very, very highly priced in for September.
So all eyes on that jobs report on Friday.
Yeah, absolutely. And look, I'll tell you something else. If that unemployment rate comes in at 4.1% and it triggers a modified version of the SAM rule, according to my colleagues Simon Flint and Mark Cudmore, that is actually ultimately a warning sign for that stock market rally that we've seen. And we have seen, yes, stocks did notch another record high, S&P 500, its 32nd record just this year alone. But let me tell you what's so interesting about it this time around. NVIDIA wasn't there to mark that rally, to boost that rally. So it is showing that rotation that you were referring to. But now I'm going to say, well, okay, there's excessive bullishness in the market. And my question to you is, and to the rest of the market is the top in for stocks in general, or are we still going to press on with those gains?
I mean, this week, it's still quite a good week, actually. It's one of the longest, best performing weeks since March. But I guess what's supporting these equities is a real question.
Well, what's supporting it is the opportunity cost to sell is so high. Because if you want to enter tomorrow, you're entering at 1% higher. So the opportunity cost to sell is just too high. Yet at the same time, investors don't want to. That's why investors don't want to sell, but they're holding on and remaining cautious on adding new positions. So the new catalyst that investors are looking for is really the earnings data that's going to be coming up for Q2. Now, in Europe, we're being presented by quite an opportunistic situation where, again, politics is dominating sentiment. But if you look at the projections for EPS growth, it's actually up 3% for Europe, and that's the first positive since Q4 of 2022. So, you have an opportunity where stocks, even international stocks domiciled in Europe, are being penalized, yet the EPS forward-looking projection is still high. So that definitely provides an opportunity for investors.
And can you still make a case, actually, for being long or bullish European equities with what's happening in France politically? Is that if you have a division, but also more to the right and more to the left, and you lose that center, then you don't really know what policies you're going to end up with.
It is definitely on our minds, Francine. What we see as the opportunity is what bonds are reflecting and what equities are reflecting. So the bond market has already shown a tightening of spreads between OATs and bonds. Yet on the equity market, that correction has not unwound. So that tells us there is a little bit of that buffer that investors can play. It's very, very hard to project whether we will get this far-right majority. The probability has clearly declined. We believe there's a higher probability for a left coalition. And in that scenario, we still see a bit more stability on the macro front compared to what we've been pricing in when the snap elections were called.
What are European bonds telling us in terms of stability in general? There's not much of it around.
No. But look, I mean, there's definitely, I think traders are now starting to accept maybe there's less political risk in France than we had originally anticipated. So, yes, the spreads have tightened slightly. We have the French auction coming up later today as well. We're expecting demand to be okay. And we know as well that the first issuance or the first debt issuance that came after the snap election saw a healthy demand as well. So, I do want to point out that the CAC 40 did rise. So there is some profit there is some return for that risk appetite. But it's all up to that second round of vote on Sunday. And come Monday, we'll come again and talk about whether or not that, profit taking was due or is it too early. So
Yeah, and we'll see how it plays out also in the next couple of weeks when we know the policies on a possible coalition forming. Thank you both for joining us. Bloomberg MLive's Noor Al-Ali, Anka Gupta, Wisdom Tree's Director Macroeconomic Research, stays with us. Now, Bloomberg has also learned that AXA is studying options for its investment manager, and it's been considering a combination with BNP Paribas Asset Manager. Now, you can see for the moment shares actually in both stocks gaining, AXA gaining 1.4%, BNP gaining 2%. Now, coming up a little bit later, the French far-right leader, Marine Le Pen, lashes out at rivals moving to block her gaining a majority. We take a closer look at market reaction ahead of Sunday's vote. This is Bloomberg. Well, let's turn back to France now, where the far-right leader Marine Le Pen has lashed out at President Emmanuel Macron's centrist group and a left-wing alliance, while the two rivals are joining forces to block her National Rally party from getting an absolute majority in the second and final round of the French legislative elections. Now, let's get more from Bloomberg's Phil Serafino. Phil, great to have you on the program. So how do these withdrawals actually change the outlook for the race? This is parties trying to get together and drop out to make sure that Marine Le Pen's party doesn't come up tops.
Yeah, this is making her task much more difficult. You know, she needs 289 seats in the National Assembly to have a majority. Immediately after the first round of the elections on Sunday, there were some projections that said she was within reach of that. I think one of the big stories of this election has been unity. The left and the center have gotten together and said, right, we're going to stand down in constituencies where there's a three-way race, make it easier to beat the National Rally. And, you know, France has famously fractured politics, but they've managed to come together on that. So this raises the question of what happens on Sunday if National Rally doesn't get 289 seats. Maybe we have no party with a majority, and then there would have to be some form of coalition government. It's a bit unclear, but Gabriel Attal, the Prime Minister, said the other day on TV, number one job is to prevent the National Rally from getting a majority, and that's what it looks like is going to happen.
So, Phil, how are markets likely to react to a hung parliament?
You know, the feeling among investors is that would be the best possible outcome. We have Morgan Stanley out with a note today saying, hey, it's time to buy French stocks. It looks like there will be a hung parliament. It's not really clear how policy making would work. Attal was saying on TV, look, if there's no one with a majority, we'll put together coalitions on a case-by-case basis for various pieces of legislation. That means things might move slowly, and markets might be okay with the fact that there won't be any radical changes in fiscal policy, in regulatory policy. And so that seems to be why the markets have calmed down a little bit since the initial shock of this election.
Phil, thank you so much. As always, we'll continue following, of course, these French politics very, very closely and the market reaction to them. Phil Serafino over in Paris. Now, coming up, the Ukrainian President Zelenskiy tells Bloomberg that if Donald Trump has a plan to end Russia's war in Ukraine, quote, he should tell us today. We'll bring you our exclusive interview next. And this is Bloomberg. Well, Ukrainian President Volodymyr Zelensky says if Donald Trump has a plan to end the war, he would like to know about it now. The Ukrainian leader warning that any proposal must avoid violating the nation's sovereignty. Well, Zelensky spoke exclusively to Anne-Marie Hordern from Bloomberg about the U.S. election race and challenges around agreeing to a ceasefire with Russia.
So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. We are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? We didn't the war even to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today, because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
Ukrainian President Volodymyr Zelensky there speaking exclusively to Anne-Marie Hordern in Kyiv. Now, Bloomberg's EMEA news director Ross Matheson joins us for more on all of this. Ross, I mean, if you're Zelensky right now, you're not feeling great about the state of the world because you potentially have Emmanuel Macron being kind of his party wiped out on the elections on Sunday. And then you have Biden, who's also not looking great in the U.S. race.
Well, that's right. So he's looking around and thinking we're 2.5 years into this war, and if this war is continuing at the end of the year, which seems likely, the political landscape globally could look very different. And of course, Zelensky has a troubled history, to say the least, with Donald Trump. They've really criticised each other before. Donald Trump has accused Zelensky of corruption, and that's something the Ukrainian president has denied. So how do you form a dialogue with the US under a Trump administration? Donald Trump has also made clear he doesn't support sending further US military aid, military equipment and financial aid to Ukraine, so the spigot will get cut off. That's very clear. And he says he'll end the war, pretty much straight away once he comes into office. So it was interesting from Zelensky. You saw a mixture of defiance, but also pragmatism. He knows he may have to deal with Donald Trump. He knows he may have to open a conversation with Donald Trump, but also that defiance was like, well, if you think you can end this war, within days, tell me how.
Yeah, and how could he, actually? Because Trump does say, look, if he gets into power, like 3 days afterwards, it would end. What does that mean?
I mean, one thing it probably does mean is withdrawing US aid from there. So Ukraine will be left more on its own to fight against Russia. But doesn't mean that somehow Donald Trump thinks he can convince Vladimir Putin to come to the table, because it's not just about Ukraine. It's about Russia also, and Vladimir Putin being willing to end his war. So what does Donald Trump think he could do with Vladimir Putin on one side? On the other, he'd have to convince Ukraine to negotiate, and that would mean that Ukraine will have to give up territory to do so. So he'd have to say to Ukraine, look, we're not going to support you anymore. Vladimir Putin can essentially take these bits of territory that he wants, and that's it.
So the relationship is so important between the U.S. and Ukraine. Do we know of any outreach from Zelensky to Donald Trump, or how does he kind of get it back on track?
We don't know at this stage if he's having any of those conversations. He obviously has a very strong relationship directly with the current US President, Joe Biden. He's had a bit of a fraught relationship with some other politicians in the US, but very much that direct line that's going on. So we don't know if he's doing that outreach, but we know he's willing to, because he said also, for example, he's very willing and he's quite keen to talk to China. And he said repeatedly he'd like to talk further with the president of China, Xi Jinping, to enlist his help to try and convince Russia to end the war. So he seems quite willing to talk to anybody. We don't know if he has any relationship now with those around Donald Trump, who would be the conduit, for example, but he has signalled that if Donald Trump does win the election, he'd be willing to open that dialogue again.
Ross, thank you so much. Bloomberg's EMEA news director Ross Matheson there with the very latest on Ukraine, and of course Anne-Marie's exclusive interview with President Zelensky. Now, a little bit later on, we'll also be speaking to Valdis Dombrovskis. He's a European Commission Executive Vice President and EU Trade Commissioner. We'll ask him about EVs, and we'll ask him about Europe and China. That's at 10:15 a.m. London time. A reminder that you can also watch Bloomberg's coverage of the UK election tonight with a special broadcast at 10 p.m. UK time. I'll be joined by Stephanie Flanders. That's when exit polls provide a first indication of the vote's outcome. Coming up, President Joe Biden's future splits the Democratic Party. We'll take a closer look at what some leading Democrats are saying. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, pressures are growing on Joe Biden to drop out of the presidential race. The White House denies a report that he's told an ally that he may reconsider running again. Now, in a Bloomberg exclusive, Ukrainian President Volodymyr Zelenskiy challenges Donald Trump to reveal his plan to end the war. And voting is underway in the UK general election. Join us at 10 p.m. UK time for a special election broadcast. That's when exit polls provide a first indication of the vote's outcome. Until then, we cannot talk UK. Now, France goes to the polls for a second round of voting on Sunday. But frankly, the debate over President Biden's candidacy has somewhat stolen the spotlight this week. Let's discuss all of this with Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight. Also joining us is John Authers from Bloomberg Opinion. What a lucky stroke of luck, actually, to have you in London to talk the U.S., John. So it's great to see you both. Yeah. Does Joe Biden survive this? I mean, the concern is that no matter how much, Tina, the White House says that, look, he's not going to stand down, he stays on. I feel like the narrative has now run.
The momentum behind the idea that Biden should step down to make way for another candidate is accelerating, and it's accelerating fast and faster than the White House can control the narrative. I mean, I think the corollary here is to think about crisis comms for a company. You can't spin this. It isn't a moment. Aging is a process which is not reversible as far as anybody knows. They've got a couple of interviews coming up. We had the meeting with governors yesterday where Vice President Harris joined. And then tomorrow, the interview with George Stephanopoulos is going to be very closely watched. But I keep seeing people in the Democrat camp talking about Biden needs to step up, he needs to reassure. I sort of think that ship has sailed.
Yeah.
Do you agree, John?
Yes. He can't get younger. That's the problem. Sometimes when politicians get into really serious trouble, really lose the narrative in the way that Biden has in the last week, there is something they can do about it. I don't think there is in the case of Joe Biden, even if he is much better, makes a better case for himself the next couple of times he appears in public. Again, all of us who are of voting age know what aging is like from people we know, if not from ourselves. It involves bad days and good days. The problem is, if you are capable of having as bad a day as he had in the debate, you probably shouldn't be the president for the next 5 years. I don't think that's surmountable, and I think eventually, yes, one way or another, he probably is going to stand down.
So, John, people in the Democrat Party say, look, he's the only one that can win against Trump. I don't know whether that's changed. And they've also said it's almost impossible to have someone else running. Is that also not true?
I don't think that's true. I mean, the fact that you addressed it to
I agree.
John. Sorry.
I agree.
Yes, there are norms, there are customs, there are things that never happened before. I think it's time to throw out the playbook.
Yeah, I think one of the key points to address Francine's point there is that one of the critical things about the polls at the moment is that they are showing other candidates doing better against Trump than Biden does, including, and this is why there is such a bubble of interest in Kamala Harris again, Kamala Harris is actually outperforming some of the more interesting governors who people are talking about as candidates. That's a very serious issue which knocks one of the other big supports for Biden's candidacy.
It's also important because it makes it easier for the hardcore Team Biden to contemplate.
Yes.
If Kamala stays on the ticket, right, like having a clean slate, I think, is inconceivable. But it changes the dynamics.
Tina, first of all, who convinces Joe Biden that he needs to step down? Only his wife? I keep on hearing this from many parts.
I feel a little sorry for Jill Biden in that she's sort of being turned into Lady Macbeth or Yoko Ono or somebody in terms of the overriding narrative. She's obviously most important. If you have a bunch of senators, he was a lion of the Senate, spent however many decades in the Senate, go to him and point out there's a fascinating piece by Nate Silver in today's New York Times. There are 5 swing states where there is a defending Democratic senator running. There have been something like 45 polls, and the senator candidate has done better than Biden in every single one of those polls. He is plainly, blatantly running behind another Democrat in those states. I think that is the kind of thing, given how much he cares about the Senate, that might sway him. But
Democrats have to decide if they want to win. I think, I mean, I'm maybe oversimplifying.
But who's Democrats? There's not one person that says, Mr. President, now's time.
No, but there's evidence. And the more we see these kinds of simulations with different tickets, I think that's going to be persuasive. I mean, I was told by one of my clients that this was heretical stance to take. But I think it's just what the race needs.
So what happens next? I mean, again, there's conventions in case this happens, but we've never tested it.
Signposts.
Yes.
Always look at the signposts. I'm highlighting the fact that the NATO summit will take place in Washington in 2 weeks' time. That means Biden will be on the world stage, but surrounded by U.S. allies. That would be an opportune moment to have conversations with U.S. allies. Democratic National Convention, mid-August. This needs to happen soon, however, if it's going to happen. And I think if it doesn't happen, Democrats lose.
Do you think it happens even earlier?
I think it could, although having heard Tina's suggestion about the NATO summit, I think that does make quite a bit of sense. You could also bring Kamala rather more forward than you usually do to meet the other dignitaries and get the kind of advantage that you get from hobnobbing with world leaders in public, which some politicians... I'm sorry, I'm not allowed to mention Britain.
I think you can say the word UK.
I didn't say that. Yeah, I did not say. I said nothing about that. In general, most good politicians think it's a good idea to appear with world leaders in the run-up to a big election. So it could be a coming-out party for Kamala as well as a big farewell occasion for Biden.
I've been told until like 2 weeks ago that the vice president almost had no chance of being elected. Why the sudden change?
Her ratings are up. Listen, I mean, her stock is literally
But compared
up.
to Biden, not compared to Trump.
Compared to Biden, can she beat Trump? Again, we need to see some polling simulations. Usually, you know, if she's elevated to the presidential candidate, a VP candidate normally doesn't move the needle. In this case, I think it would. We've never been there before. What I don't see, by the way, is two Californians on the ticket. Much as I am a proud native Californian, you're not going to see Gavin Newsom and Kamala Harris on one ticket. You've got to have, I think, a Midwesterner. But again, we are ahead of the political process, and markets, as ever, are way ahead of the political process.
Yeah, so the markets are, I mean, we're seeing like dollar move, we're seeing Treasury move, but are they betting now for that Trump is president?
It has been more likely than not that we're going to get Trump 2.0 for at least 6 months now. And so there hasn't been a great display of angst about it. You certainly did see an interesting rise in long 10-year bond yields after the debate. I do think it's been overstated. The 10-year yield has actually come back down a bit as the depth of the problems for Biden has become more obvious the last couple of days. But yes, it's obvious that there is some degree of concern that Donald Trump is suggesting tariffs plus tax cuts, which is very inflationary, and suggests also that that there could be pressure on treasuries. So,
John,
there is a concern there.
Does it impact Fed at all? I know that. I mean, although some of the data, we have jobs tomorrow. There's quite a lot of data that's pointing to, you know, slight unemployment getting a little bit worse than expected, maybe a softening of the economy, but they kind of also want to wait.
I don't think the Fed. I generally think that there's a lot of commentary suggesting that the Fed wanted to be much more lenient this year to help Biden, which, given that Jay Powell is a Republican, appointed by a Republican president who served in the Republican treasuries, has always struck me as a little strange. I don't think it has that big an effect over how the Fed appears. Its greatest concern will be not to appear political to the extent that it matters. I do think, and this is another thing that could affect things very much more come September and October, you know, if you look at Project 2025, they are interested in fiddling with Fed independence. Markets will be very bothered by that. It might be a good idea. It ratchets up uncertainty, and that could be very dangerous. So the Fed will come into play here, but I don't think this is affecting how they behave now.
I remember this like tiff also between Donald Trump, who appointed Jay Powell, but calling him like the worst player on the team, and then the most improved player when he did something on rates he didn't like. Tina, I mean, we're still like November 5th is the election. We're July 4th. I mean, it feels like anything can happen.
That's it. And that's why I think the fact that the street is piling in to Trump trades is way premature. And why, I'm quite enjoying seeing this race shaken up a bit, because we've got 60% of Americans who don't want to vote for either candidate. But the idea that Biden exiting means the Trump inevitability trade gains momentum, I think that's wrong.
Yeah.
We're going to have much more complex dynamics. And finally, I think a bit of a frisson in this race.
There you go, a little bit of frisson. I mean, could it be that actually the Democratic ticket is not Harris, that it's someone else?
I think that's a lot more difficult to contemplate. I think that Democrats, the bargaining that's going to take place on the left of the party will mean that they won't want to, to see the party's first African-American, Indian-American female vice president be pushed out. I think that's a hard sell.
Exactly. One very interesting thing I saw, Lindsey Graham, Republican senator, quoted that he was scared of the idea of Kamala plus Gretchen Whitmer of Michigan. I think it would be a very big, bold step to have two women on the ticket. Maybe, but how does Trump or any political strategist responds to a very feisty woman like Kamala at the top of the ticket and a much feistier woman like Gretchen Whitmer, who is from the ultimate swing state? I think it's a high risk thing to happen, but it would really cast everything into confusion if that happened.
You mentioned the frisson, so I need to ask you very quickly about France, because Sunday's a big day.
Got France on the brain.
France, me too. There's a lot going on. It looks like a lot of parties are trying to block Marine Le Pen, maybe with success. But then the composition of Parliament is quite strange, because then you could have two very right and very left blocs, and kind of the centrists withering away.
I do think French elections kind of break the American brain in a lot of ways because of the two rounds, because of the, it's not the winner-take-all system, because of this kind of deal-making between rival parties to block the National Front. Again, I get notes from people saying that I was being mean to say that populism is a gateway drug for fascism, but the wartime history of France means that blocking the far right is an imperative. That's what's happening. I think the scenario that markets aren't pricing in is the kind of hung parliament, which doesn't sound so bad, but the fact that France may not have leadership heading into Olympics, yes, but if the RN does as well as is predicted, there will be civil unrest. The far left will get people in the streets, and there'll be a lot of concern, even if markets have become relaxed, thinking that Le Pen will do a Giorgia Meloni.
Yeah, I've heard that a lot, actually, from chief executives. What they really worry about is protests and not being able to get workers into the office and things like that. Thank you both for joining us. We could go on for hours. Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight, and John Authers from Bloomberg Opinion in London this week. Now, coming up, more from our exclusive interview with President Zelensky talking about Russian gas. That's next, and this is Bloomberg. Well, President Zelensky says Ukraine is in talks to send natural gas from Azerbaijan to the European Union as it seeks to maintain its role as a transit country and help Western neighbors ensure energy security. Well, in an exclusive interview with Anne-Marie Hordern in Kyiv, Zelensky said Ukraine will not extend a transit agreement set to expire at the end of 2024.
Yes, we don't want to extend the gas contract with the Russian Federation. We don't want them making money here. This is my main signal to the government of Ukraine and to some European countries which are dependent on this gas. Because now alternative steps are considered on how we can use the pipeline with other suppliers, with a different country. There are these negotiations.
Well, the Chinese President Xi Jinping and his Russian counterpart, Vladimir Putin, said relations between their countries are, quote, at their best in history. Now, the two leaders met for the second time in less than 2 months yesterday on the sidelines of a security summit in Kazakhstan. It comes as frustration grows amongst Western governments over perceived Chinese support for Moscow's war efforts. While Chinese EVs have held on to their share of the slumping European market, that's ahead of new tariffs designed to protect local car makers from lower cost imports. Well, let's bring in Elizabeth Berman, our EMEA autos correspondent in Munich. So, Elizabeth, thank you for joining us. A new top levy to ship EVs from China to the EU could be as high as 48%. How significant will this be for Chinese car makers?
Yeah, the top line rate will definitely be a hit to them. At the same time, their cost advantage over making cars in China and shipping them over here allows for some absorption of that extra cost. There are some forecasts that the tariffs in their current form would cut imports from Chinese-made EVs by about 25%. The question that's out there is that how long would that go on for? Because there are, of course, other ways of competing in the European Union or Europe as such, which is by setting up production capacity over here. This could also be achieved quite quickly by going the route of assembling cars, which means you bring over disassembled kits of vehicles that you can piece together quite quickly. And one example we've seen there is Stellantis, which did a deal with China's Leap Motor just last year, towards the end of last year even, and they've already started piecing together some Leap Motor cars at a plant that belongs to Stellantis in Poland.
So, Elizabeth, is there any sign of progress on Beijing and Brussels negotiations?
Yeah, both sides throughout this have emphasized that they are open to talks. At the same time, Brussels has also signaled that they do want to move ahead with these tariffs, which also brings the EU in line with other key regions around the world. I think is also important to remember. The US has moved forward with a pretty definitive tariff of 100% on Chinese EV imports, and so it has, and Canada has also fallen into line with that. At the same time, there is still a fairly large window of opportunity for talks. These tariffs that are coming in now are provisional, with definitive ones coming in November. And during that time, both sides are set to continue negotiating because obviously both sides also very much depend on each other for economic ties.
Elizabeth, thank you so much. Bloomberg's Elizabeth Berman there on the very latest on EVs. Now, coming up, we look ahead to tomorrow's U.S. jobs report as questions grow over the labor market reaching an inflection point. That's next, and this is Bloomberg. Well, JP Morgan's chief global market strategist, Marko Kolanovic, is leaving after 19 years at the bank. An internal memo obtained by Bloomberg says he's leaving to explore other opportunities. Kolanovic had a disastrous 2-year stretch of calls on the U.S. stock market, staying bullish as the S&P 500 tumbled in 2021, then returning bearish as the market bottomed and rebounded. And traders are watching for tomorrow's U.S. jobs report to see if the labor market is nearing an inflection point. Well, let's get more now from Bloomberg's MLive. Ven Ram. Ven, thank you so much for joining us. I mean, there's just quite a lot of things that traders are looking for. Not only the jobs report, they've had also some economic data supporting the case for Federal Reserve interest rate cuts. But then you speak to Fed officials, and the overarching feeling is they want more data and maybe we stay higher for longer. What's your take?
Morning, Francine. I think that we are moving closer and closer to the inflection point where the Fed is going to feel more comfortable that the economy is cooling off. I think crucial to the calculus will obviously be the jobs report tomorrow. And specifically, the markets are expecting the jobs market to post an addition in terms of expansion of payrolls. That is not so important as much as the headline inflation numbers, the earnings growth data and the hourly earnings growth data and the jobless numbers. Both are expected to come in around 4%. And I think that if we see the jobless rate tick higher than 4%, I think that the Fed, that'll bring forward the prospect of a Fed rate cut. But we need to see evidence also that inflation is cooling. Hourly earnings growth holding around 4% is largely inconsistent with an inflation target of 2%. So the Fed has a tricky terrain ahead, no question about it.
So, Van, what's your take on how important is the jobs number on Friday? Because, again, the job number is okay in general. There's 4% unemployment, but actually it also is ticking up higher.
Yes, it's also ticking higher, and which is why I think that the Fed will want to see what happens with the jobless rate number. I mean, given the participation rate, I think that they will need a number greater than 4.1%, possibly 4.2%, for them to feel comfortable that they need to cut rates in September. And I think that calculus will be crucial in how the Fed's reaction function evolves after the jobs data.
What's your take on what's happening in France? Van, again, the markets may be a little bit calmer than they were in the last couple of days, but you could be left with a mess of coalition making, like Italian style.
Absolutely. I mean, if we get a coalition government, as it looks likely from the projections, I think that the markets are in for a long period of uncertainty because policy making, as you said, is going to be in limbo. But I think at the moment, the markets are thinking that, look, if we get a hung parliament, that means that the prospects of fiscal profligacy take a backseat because no government will be able to put through proposals that outline unbridled spending. And that's the market's key focus. So I think that there is scope for French bonds to rally, as they've been rallying indeed in this past week. And I think that that rally may solidify, especially if you look at currency-aged yields on French bonds. I think that you're getting a pretty juicy pickup, almost 5% on the 10-year. So I think that the investors will find that the risk-reward asymmetricity quite alluring.
Van, thank you so much. Bloomberg M Live's Van Ram there with the very latest, of course, on some of these markets, especially tied to political events. Now, you can watch Bloomberg's coverage of the UK election tonight, the special broadcast at 10 p.m. UK time. I'll be joined by Stephanie Flanders. That's when exit polls provide the first indication of the vote's outcome. Up next, we speak to Valdis Dombrovskis.